How will the unrest in Iraq affect you in the pocketbook, specifically affect oil prices? Someone with a take on that, oftentimes a guest with us to discuss the economic balance sheet, if you will. David Gurwitz, Managing Director of Charles Nenner Research. David, we welcome you back to America's Forum.
Thank you, John, and congratulations to Newsmax for now expanding its reach to many, many more homes.
Well, even as we are expanding, past 35 million homes on DirecTV and Dish Network, David, I have to ask you the impact on the price of oil thus far with what has transpired in Iraq.
Well, thank you for asking. And, many of your new listeners haven't seen me or Charles Nenner speak. Charles Nenner Research Center. I'm the managing director. Charles was at Goldman Sachs for over a decade, being one of the top people in technical analysis. His system that he came up with while he was in medical school predicts tops and bottoms and levels in stocks, bonds, commodities, and currencies based on repetition of past patterns. So we don't look at the news as causing what's happening, which is, I guess, why you like to have us on. We're the kind of oddballs that you have. But you said something interesting, John, about fundamental. We think cycles, from the Greek word circle, indicating top to tops in any data series, like a bunch of EKGs when you take a heart rate thing overlapped, that predicts what's happening. So actually, the news is showing horrible things going on there, but we think crude prices are topping because cycles are topping and they're actually heading down.
So, despite the unrest in Iraq, you think long-term the crude prices are going to come down?
Well, let me answer that exactly. They're down now. We think they're going to come back up to our target of 122, but it's approaching our short-term target of 108, and it's going to head down for a while first. So it will go up there based on its own cycles and also based on another set of cycles we look at, which Charles called 4 years ago, called war cycles, which are unfortunately bottoming and increasing as we see all over the world. And that seems to tie in with longer-term crude going to 122 and more, but not now.
All right, well, I'm interested in, pardon the pun since we're talking oil, drilling down on what you call the war cycle, because, I mean, you take a look, Malaysian oil company with staff in Iraq, they're evacuating employees. You can see short-term stuff based on the insurgent actions by ISIS and others, which has to impact production right now. But can you elaborate more on the quote-unquote war cycle?
Sure. I'm going to say one thing. If people Google the 100-year war cycle, 100 years ago, there was a war called World War I. I think there was a song, the Overture of 1812. There was a war in the second decade of the 1700s, 1600s, 1500s, going back 1,000 years. So that's an example of a cycle. And that's not something we're making up. It's not something they communicated each 100 years. So that's an example of war cycles. One cycle, that's a 100-year cycle. There could be a 50-year cycle. There could be an 80. And what we do is try and superimpose them to see when they're all topping or bottoming. So Charles on TV 4 years ago mentioned war cycles were bottoming. We may not see it really stepping up right away, but if you look around the world, there's quite a few hotspots. It's not just Iraq.
David, we take a look at crude oil and we talk about gasoline at the pump, but what about the natural gas markets, especially what has been discovered in the United States and really what we're seeing in Eastern Europe with the ongoing, I guess we could call it a portion of the war cycle, or at least uncertainty in the Ukraine? Your take on natural gas and where that's headed?
We also think that's heading back towards $2, believe it or not. Let me explain. Nat gas was $12 several years ago, went down to $6. Everybody thought it was going to go way back up, and Charles saw that it would be going to $2. And he was right based on cycles and target. What happened was a lot of banks had lent money. I think I've explained this on the show, but for the new listeners, a lot of Canadian banks had lent money to Canadian nat gas producers when nat gas was $6. And it went to $5.50, $5, $4.50, $4. And then just like a bank makes a mortgage loan and the loan is underwater, they were underwater on their loans to the nat gas companies. So they called in the loans. And it went, and the nat gas companies had to sell their production, and the newspapers said then nat gas prices down because of forced selling by banks, forcing the sellers to sell. And we said no, because it was cycles saying it was down. So we're saying the same thing again now. Longer term, nat gas is also down probably another year or so till close to $2, and then it should start to go up again. Same idea. We're kind of looking at things based on past patterns repeating, not what the news is saying.
Well, David, in the 2 minutes we have left, we're just going to take the blinders off, take a look at every sector of the economy, every measure of wealth, over and above and beyond energy.
Okay.
As you're taking a look at this, taking the cyclical view, is there any surprise out there that people should be mindful of in any sector of the economy, something that might surprise them? About a minute and a half left.
Okay, when you say surprise, be more specific, because a few things flew in and I want to answer your question directly.
Well, is there, since we have sobering news all around, is there any surprise that is good news economically in the cycles you see right now?
Well, let me just talk about quickly stocks, bonds, commodities, and currencies. We think gold is near a long-term bottom. We called the top 2 years ago, and it was 1900. We just called this second bounce, but it's just a bounce, gold and silver. We think longer term, that's going to be going up. We think that grain prices will be going up longer term, and people should write into our site and get samples of the research, charlesnnenner.com. But basically, no, we think stocks are near a top and down for quite a while, although the 2020s look like it'll be an incredible time for stocks. So shorter term, it doesn't look very good according to us. But again, it's important. It could be sideways stock market for a while and not a major crash down, although there could be one violent move coming soon. And that's why it's important that people, at least pay attention to what we consider fundamentals called cycles.
Well, David, as I listen to you talk about cycles, this is my term, not yours, but I heard you talk about the 2020s, and we know a century ago they called them the Roaring 20s, so
correct.
It'd be interesting to see. Mark Twain said it years ago, history doesn't repeat itself, but it rhymes. We very much appreciate your time, David Gurwitz, the Managing Director of Charles Nenner Research, and we look forward to having you back real soon. Now, don't go away. There is more straight ahead on America's Forum.